Welcome to Caching Waves. This is an Elliott Wave update for Bitcoin. If you watched my video yesterday, you should have hit target if you decided to make the decision to take the short yourself based on my analysis for help. We hit the 1-to-1 extension of this A off the B at $58,093. We hit it to the tick on the last low. So if you're new here, this was the video from yesterday. I'm just going to play like 10 seconds of it for this count. Okay, so, and one other thing to note on this, since this was so three-wave-ish, I always say a C wave should be longer. This is one scenario where we can get a fast drop. We can get a flash crash, something like this, that freaks out the whole market and then very quickly recover. This is one scenario where that can happen, where it doesn't take longer in time. Okay, especially if we get an impulse down. All right, so that was yesterday, and the target area we were looking to short from, discussed in yesterday's video. Idea was literally, let me go to trading view, right here at the 1-to-1 extension where A equals C for our wave 2. You can see it hit that to a T, and this was from yesterday's video when I was lining that up as a 1-2. So anyways, that was one that went our way. Just to be clear, like a lot of people think Elliott Wave is like predicting the future. That's not the case whatsoever. If you watch yesterday's video, I only decided to take this short because I had two counts going the same direction, and the highest probability that was fitting guidelines the best was this count. That's why I had it labeled as that way. I wasn't predicting the future. It was the one that was fitting guidelines the most. Now, we're kind of in between zones now that we have to update this. This was quite the flash crash. If you guys have been in flash crashes before, you understand how quickly they can recover. They can look janky when they recover, something like this. So we're not going to know, we're not going to have a nice wave count off this low, most likely. Okay, so there's certain strategies I play in these scenarios just to make sure I'm still involved, because the area where we actually break structure that we broke down from is like $3,000-4,000 away, right? So how do you take advantage of that? Well, first let's go over the two counts I'm watching on the short term. First is, I currently have this. This is an extended fifth wave within the third wave. Have this labeled as a 1-2, 1, 2, 3, 4 with an extended fifth wave in the third. We sometimes get these during flash crashes and when we get stop hunts. There was a lot of people with stops right under these levels, and they're just closing out their long trades. We just broke like 6 different levels all in one shot, right? So they're covering their longs in those situations. That's where you get those flash crashes. It's just a snowball effect, right? So that's why we get these crazy waves sometimes. That's why we got this wave back here on Bitcoin initially, just running stops, long stops, right? So as of right now, I don't have a completed C wave, but I'm between two counts. So where we get a C wave, we need 5 waves down here because this is a double zigzag, WXY. We need 5 waves down here to consider a flat complete. So we'd be looking for a fourth, it's a triangle, flat, whatever in this area, and a fifth wave move down. Anywhere we can hit the 1.618 extension of A off of B, or we can hit somewhere in between this zone. What's nice about the 1.618 extension is it lines up just above the 618 retracement of this W wave to the upside. But what if we don't get this last move down, right? Well, if we don't get this last move down, that still opens up the possibility that we are still in this diagonal idea we were talking about. We have not hit the 786 retracement of this move yet to the downside. And a diagonal is a series of 3-wave moves in our zigzag patterns, looking for a ABC to the upside to complete a larger wave 1 and 2 of the fifth wave to the upside. So when we're in between these two zones, although this isn't looking as nice anymore, we don't have quite the contracting nature we have yet, although not technically invalid yet, I have to be aware of both these options. So when you're between both these zones, I've closed out my short, so I'm neutral at the moment. How do you take advantage of this, right? Well, the way I do it, this is not financial advice, I'm just giving you what I do, is sometimes these can recover quite quickly and you don't have time to catch a nice move to the upside as a 5-wave pattern. I mean, ideally we get this nice little 1, 2, 3, 4, 5. It's perfect, holds at the fourth of one lesser degree and a nice sideways ABC. That's the perfect world, right? We get that. But in reality, we don't always get that. Sometimes we get like a 1, 2, 1, 2, and boom, right? And you're like, I don't have my long. How do I get in that? And we get that 4 or 5, and we just keep going, and the market's gone, right? So what I do in that situation, what I found best works for me, is I know I'm likely within a fourth wave here in the C wave potential. All it is potential. Nothing says it has to happen. This is only potential. So I'm in this zone. So I'll take from my beginning of wave 2 to our wave 3. And for our third wave, we look for the fourth wave to come between the 236 and the 382 normally and invalidated past the 50, right? So let's put that. Sorry, not invalidate, but hold below the 50. Probability shifts huge as soon as you pass this 50%, right? So our ideal fourth wave would be somewhere in this zone. So we can track this wave, see what kind of pattern plays out. Do we come back? Do we come back? Do we come back? Do we go up? Do we get some sort of triangle to the downside? We usually get triangles in fourth waves, so that's one pattern I'd look for. Do we come up, down, down, up, and make some sort of running flat, and then get our fifth wave down? Another possibility. But what we don't expect is to make a move up, right? Past that 50%. So what you can do, this is what I do, is I kind of pay attention to where that 50 is. 69.956. Go with the one that's furthest away. And what I would do here in between is I would put a trigger order just past this 50. A trigger order long, just past this 50, because I don't want to wait for this trigger break in case we do recover as like a V-shaped recovery very quickly, right, over the next couple hours. I would put a trigger long above this area, and depending on the wave count, if we do get a 5-wave move and we just launch, well, obviously my stop would be at the beginning of that wave 2. But if we make something like this and just go, or we're drifting in several 1-2, 1-2s, something like this, I would change my entry and my position size based on where the stop makes sense in the wave count. But if I'm just going to bed or something like that, I'll just put my trigger entry above that 50 where the fourth is unlikely to come, and my stop will just go at this low. So that's basically my risk, my 1% risk I take in the trade. And if we happen to make this fourth wave triangle, all good. I didn't get triggered in the long. I don't have to sweat it overnight, and I'll do the same scenario tomorrow on this next wave, right? I'll pull the same scenario there, depending on whether we get a fast drop for that fifth wave, because remember, there's still a lot of people with stops below these levels. There's a lot of long stops right there. There's a lot of long stops right there. So we could get this, move something like this, right? And then a V-shaped recovery. That's why I would do that probability shift zone. A lot of times I use the 66, but I'd go past that for this previous move. But after we get this, say, fifth wave as a C wave, I'd use the 66. Probability shift is past the 618, but that's my golden zone trade. Golden zone trade should hold in that level, so I just go past that a little bit And if we get this fifth wave move down, then my trigger entry would be here, stop at this low, right? But remember, we're going way above these levels. That's our target, right? So that's how I'm going to play this zone. I have a trigger order above this 50% retrace of this third wave, and my stop is currently at this level for the longs. And if we make this fourth and this move down, all is fine. I didn't get triggered in. I'm not sweating. I'm only getting in if the market comes to me and puts probabilities back on my side. That's the helpfulness of Elliott wave. Now, one more issue, which we have to talk about. In my previous videos, we talked about maybe this isn't the fourth wave low, and perhaps we need to make a C wave, and this is actually an A, B, C. Because realize in this situation, if we get these 5 waves down, what do we have here since this X wave high, right? In the larger time frames, we have a potential A, 3 wave B, and we have 5 waves down now, which really is exactly the same as a 1, 2 to the downside in the bearish scenario, right? We've completed an A, B, C as a flat. This also mimics pretty much exactly a 1, 2 to the downside after a 3-wave correction, right? Although I think unlikely, I'm heavily biased to the upside just because we didn't hit the 1-to-1 extension here of W off of, in this scenario, would have been X for our Y wave. That hit the 618 extension, and we've passed the 618 retracement of this move to the downside, which is actually at 62,000. So I am biased to the upside because of those reasons. Remember, Elliott wave helps us by giving us the highest probability trade based on what's fitting guidelines the best currently. And currently, one of these situations is the best, the diagonal or the C wave move down, next move to the upside. Now, but if we get these 5 waves, we'll say, and we get a sideways consolidation rather than an impulse recovery, then we can discuss the bearish scenario. So it's going to be important what happens in this area after this 4-5. But if we don't get this 4-5, we don't have to think about it. We would expect this diagonal to the upside. Okay? So that's what I'm looking for, guys. That's my trading, the way I'm trading, above this 50, triggered long, stop at this low. Or if this wave count shows me a nice 5-wave move in an ABC, perhaps my stop's a little higher, but that'll be something I do in real time, right? If we get this 4-5 down, I'll be looking to take the entry the exact same, 618 retracement of this last wave, stop at this low, and hopefully catch that nice low. Now, I'm not going to discuss right now what we'd look for in the future, but most likely a pretty quick move to the upside, a Fibonacci extension of this W off this X to create a larger diagonal. But we'll discuss that in a later video. I've gone on for 13 minutes. Right now, just looking for this to recover. I got my trigger in or make a sideways pattern and get our 5th wave to the downside before our attempt to the upside. Okay. Now, there are trades here, by the way. I'm not sure if I'll be able to cover them. I do have some family stuff I'm doing tomorrow. So it might be later in the afternoon or in the evening. I talk to you guys. I'm meeting for breakfast tomorrow. But if this ends up making some sort of, say, triangle, there are trade setups here. Just a little bit of help. If you get a nice little A, B, C, D, E, oh, that was mislabeled. If you get a nice little A, B, C, D, E, the way I usually trade these is enter below the D and trigger in. Again, I don't just enter, I trigger in. Below the D, stop at the E wave. Something like this. And target the 1.618 extension there would be where we're targeting, or count the waves down, right? If you can count 5 waves and it's a little shorter, obviously you're going to get out. But there is a nice little trade setup if it pans out that way. Quick little 3-4 to 1. Nothing wrong with that if you're scalping during the day or if you see some sort of running flat that's obvious, cleaner the count, the the easier it is to trade, right? Or if you make some sort of flat pattern, clear 3-wave move, nice little 5-wave move up, something like this, that would also be an okay trade as well. All right, guys, so I hope that was helpful. Looking for either recovery here. My entry is above this 50. I will trigger in, current stop at the low, targeting way up, or I probably won't be able to get this short because I'll be with family, or if we get this 5th wave move down, I will do the same maneuver, put my stop at the 66, or sorry, my trigger long at the 66, something like this, whenever this last move is. And my entry will be at that 66, stop at wherever that low is. So I'm just playing this till we get on the right side of things. And if the market doesn't come to me, all good. I keep waiting, right? No rush. No rush here. Let the market come to you. All right, guys, that's it for Bitcoin. Hope that was helpful. I'll see you on the next one.